Hey everyone, and welcome to this explainer. I am so thrilled you're joining us today. Look, if you've got your sights set on the Silver State, we are going to act as your personal guide to figuring out the true cost of home ownership right here in Nevada. Our absolute main priority today is to show you exactly why it is practically mandatory to use a Nevada mortgage calculator before you ever sign on the dotted line. Seriously, it's the single best way to protect your financial future. Ever thought about buying a home without spending too much? Right. I mean, who hasn't? Buying a house is this massive, deeply emotional financial milestone. We all want that dream home, absolutely. But jumping in totally blind, armed with literally nothing but the home's sticker price, that is incredibly dangerous. You really need to know if you are truly ready. There's this quote from our sources today that I absolutely love. It says, "This tool is like a map for your money." And honestly, that hits the nail on the head. That is exactly what a Nevada mortgage calculator is. It's a total financial lifesaver. It bridges the gap between your current bank account and your dream of owning a home, showing you exactly how things like interest rates, your down payment, and loan terms are going to impact your future. Because when you test your options in advance, your dream home will end up being a nightmare that stresses you out. So here's the map we'll use today to safeguard your financial future. We're going to cover 1. The home buyer's risk. 2. Unmasking true costs. 3. Your financial map. 4. Testing scenarios. 5. Avoiding mistakes. And finally, 6. Taking the next step. Okay, moving right along to Section 1, the home buyer's biggest risk. Let's talk about the absolute danger of guesswork. You know, your biggest risk isn't necessarily a leaky roof or a noisy neighbor. It's actually the reality that simply knowing a home sticker price is, well, practically useless for your day-to-day lifestyle. The absolute biggest risk you face? Guesswork. Just guessing leads to massive, painful financial surprises down the road. Preparation is the true foundation of a successful purchase. You've got to know your total monthly housing costs before you sign anything, period. Running the numbers gives you realistic expectations so you don't overspend when you're out there house hunting. Which brings us to Section 2, unmasking true monthly costs. We need to look way beyond just the loan itself. Now, this is where prospective buyers usually have that big uh-oh moment. People are often shocked to learn their monthly payment is way, way more than just paying back the loan balance. It all comes down to an acronym called PITI, Principal, Interest, Taxes, and Insurance. Now, your principal, that's great. That builds your equity by directly paying down your debt. But those other three, they are inescapable costs. Interest is the fee you pay the lender, while taxes and insurance are mandatory for protecting the property. And let me tell you, they drastically alter your monthly reality. When you actually look at how these four pieces break down, it's pretty wild. That loan principal, it's just one single slice of your total monthly pie. In fact, especially early on in your loan, you might be completely stunned to see just how massive that interest slice is compared to the principal you're actually paying off. All right, Section 3, your Nevada financial map. Let's talk about navigating these digital calculators. So, how do we actually handle all these complex moving parts? Well, there is a huge difference between just a basic estimator and an advanced Nevada calculator. A basic tool really just looks at the loan amount, but an advanced tool, that lets you fully customize your tax and insurance inputs, and, crucially, it integrates HOA fees. And listen, in a state like Nevada, capturing those specific local property taxes and homeowners association fees is absolutely vital if you want to build a true, reliable budget. Another standout feature of a really good advanced tool is the amortization schedule. You can kind of think of this as a crystal ball. It literally lets you time travel through your whole 30-year mortgage. Year 1, you're paying really high interest and very low principal. Jump to year 15, things start to balance out. And by year 30, it completely flips. High principal, low interest. Seeing this whole journey mapped out is so helpful because you understand exactly how and when your wealth actually grows over time. Let's move into Section 4, testing your loan scenarios. This is where data storytelling gets really fun. This is where running different scenarios becomes just incredibly powerful. Let's look at a real-world example of a $400,000 home. Look at the striking difference your down payment makes here. At 3.5%, your estimated monthly principal and interest sits at around $2,530. But if you can bump that down payment up to 20%, bringing $80,000 to the table, your monthly P&I drops to $2,098. Guys, that is over $400 saved every single month, just by changing one variable right at the start. The calculator also lets you easily compare loan types, like should you go fixed rate or adjustable rate. A fixed rate keeps your payments exactly the same, which is fantastic for long-term predictability. But an adjustable rate mortgage, or RM, well, that might start out lower, saving you money on day one, but it carries the risk of future market hikes. The tool basically helps you weigh that immediate savings against the real risk of tomorrow's unknowns. It's also pretty wild to see how sensitive your monthly payment is to just tiny little tweaks. Take a $300,000 loan, for instance. If you jump from a 30-year term at 6%, which is about $17.98 a month, to a 15-year term at that exact same rate, your payment rockets up to $2,531. Or check out what just a 1% rate increase does on a 30-year term. It jumps from $17.98 to nearly $2,000. These are radical lifestyle changes, and they're dictated by just a few percentage points. Okay, Section 5, Avoiding Costly Money Mistakes. Let's talk about the major pitfalls of bad data. Seeing those numbers jump around really highlights why you have to use good data. Relying on bad data is a surefire way to severely underestimate how much you'll end up owing. So here are the most dangerous traps homebuyers fall into. First, simply forgetting to add property taxes and homeowners insurance to their estimate. Second, totally ignoring private mortgage insurance, or PMI. And third, lazily using fixed interest rates to test scenarios for adjustable rate mortgages. If your calculator misses these, you are setting yourself up for a massive budget shock. I want to zoom in on that 20% threshold for a second, because 20 is the magic down payment number. If you put down less than 20%, you are almost certainly going to get hit with private mortgage insurance. But hitting that 20% mark, that eliminates PMI entirely. That frees up your monthly budget for actual wealth building instead of just throwing money away at extra fees. All right, final section, Section 6, taking the next step. Time for some real-world prep. Armed with all this knowledge, you aren't guessing anymore. You are totally prepared. So here is your clear game plan. Step 1, gather your exact financial papers and input those hard numbers into an advanced calculator to find your actual limits. Step 2, check to see if you're eligible for Nevada's state housing programs. And Step 3, take those realistic numbers and speak with a mortgage professional for an official pre-approval. Speaking of Step 2, Nevada actually has some really excellent programs for specialized financial support. There's the Nevada Housing Division, which offers state-backed loans. The Home is Possible program offers down payment grants to eligible buyers, which is huge. And USDA Rural Development helps buyers looking outside the major cities score low-interest loans. Definitely check these out early on to see if you qualify. Now, while online tools are your indispensable map for planning, a professional provides the actual key to the front door. Once you've run your numbers, our sources highly suggest talking to a professional, like a loan officer at Brighton Bank, to get a pre-approval letter. Doing this confirms your math and shows sellers that you truly mean business. We have covered a ton of ground today, but I want to leave you with this final, really vital thought. You might know the sticker price of your dream home, but do you know what it will actually cost you tomorrow? Don't leave your financial destiny to guesswork. Get out there, find a Nevada mortgage calculator, run your numbers, and take total control of your journey to homeownership. Thanks so much for joining me on this explainer, and hey, happy calculating!